What's up, traders? Welcome to the official Trade Talk channel. Today we're going to talk about a trade that we put on in the XLU Spider Select Fund for the utilities industry. Basically, what we've decided to do on this trade was you can literally see that this thing has been in a downtrend all year, noted by this yellow line, which is the yearly open. So while we are looking for trends to basically look to take positions, I'm going to teach you in this video how you can simply use technical analysis, the simple kind, the kind that I teach on my videos on a regular basis, to enter trades using options. All right, so here is a way right here. And this trade right here was put on based on a demand level. So yesterday, I actually put on the trade intraday when we retested the demand level. You can see that the 21 exponentials coming through there. You can see that we are still under the 50 on the RSI, which would indicate that the bears are still in control of this asset. And you can see today that it traded up. At any point in time, you could have bought a 59.50 strike. And I'll pull up XLU real quick. Now, I'm not in this position anymore. I actually closed it down basically because the Fed speak was getting rather volatile. And I just went ahead and shut down all my positions because I was in profit for the day. And I didn't really want to lose all the profits that I gained. But I actually did end up losing them all because the market ultimately rolled over. Had I left all the positions on, I'd be in good shape. But anyways, this video is about teaching you how to use technical analysis to put simple long put or call options into play on these low beta projects that can ultimately pay you in the long run. Now, the first thing you want to do is you want to find a low implied volatility. If you have downloaded this platform, which is Tasty Trade, you will see that the implied volatility is over here on the options chain. That is your implied volatility. We never want to buy or go long a call or a put when implied volatility is above 50. The reason for that is because over time there is what's called implied volatility crush. Implied volatility crush will suck premium away from the put or call that you have purchased. So you could literally be right on the trade and still lose money because of the implied volatility crush. So what we typically like to do is we like to find the strikes where there's less implied volatility, but we're not going out more than 100 days, because then you're going to just be paying a lot of premium that you don't need to pay. This is for small accounts. So basically what we could have done is we could have taken this right here because it had an IV of 22.6, which is a pretty decent IV to get into. 43 days out, so you got plenty of time for this trade to work. And if you would have bought the 59.50s when I told you to this morning, you would have paid about $1.40 for it. Whereas as of right now, you would be setting at $1.71. Now, I know that's not a great deal of profit, but the whole thing is if this continues to drop down, then that put position is going to pay off rather handsomely. But it's up to you to take profits. It's up to you to manage your risk. Obviously, you want to only risk 1% of your total account's equity. So if you have a $2,000 account, you're only looking to lose $20 on these plays. That's why low beta stuff like the XLU can really be helpful for a small account growth. If you have a lot of money in your account, 50K plus, then you can trade high beta stocks because obviously your 1% target is going to be much more. So like in a $50,000 account, you could risk $500 on a particular play. So all it is about growing the account consistently over time and using my brand of technical analysis to get you in those trades at the right times and at the right places. Obviously, they don't always work, which is why it is up to you to manage your risk. But had you would have taken the trade today during the live stream when I essentially said, I took this trade yesterday, but if you guys want to take it today, you absolutely can. You can buy the same strike, the same expiration as I have, and then ultimately with the Fed speak we did get that moved down. So basically today all you did was retested to 21. Didn't quite retest daily res, but the fact is you closed below supply and that is important. Now, there is a possibility, because you are at support right here, this daily close being a bearish close is support. You could potentially get another bounce, and that bounce could take you right back up to this level. If that is the case, then you can get right back into the 59.50, 59.40 is the price, but you want to buy the in the money, and then we could see something like this happen over time. And then that put would increase in value as price goes lower. So just a quick little entry on a video teaching you how to use technical analysis to basically put on options positions using long calls and long puts. Small accounts don't have the ability to sell options. And although, selling a call up above $60 would also be a trade worth consideration, with the 43-day strike out in time, you could absolutely have sold any one of these calls right in here and collected a nice little premium. You got 58 cents there, 71, 88, 109 if you want to get, a little bit ballsy and go with the $60 call. Yeah, those highs are about 60.15. So I would suggest that you sold the 60.50, $60.50 right there. That way, that gives you a little bit of breathing room in case it hits there. Now, these strikes are a little wide, but they are not that wide when the market is trading. And always try to get filled on the midpoint. Do not, well, if you're selling options, you would be getting this price. If you're buying options, you would be getting that price. So always try to get filled on the midpoint. So that way, when you try to exit the trade, you also try to get filled on the midpoint. And that creates, a nice little opportunity for you to trade in between the bid and ask. Hopefully this video helps. If you have any questions or comments, obviously drop them down in the comment section below. A lot of these videos I'm going to start putting out on the smaller channel simply because the bigger channel is just not getting traction. So there will be no live streams on the small channel. All the live streams will be on the bigger channel, but the smaller channel will have these quicker uploads, these quick to the point, really good, clear instructional tutorials. So that way you guys can learn how to be a profitable trader. All right. Thank you guys so much for joining in. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.